Hello, welcome everybody. Thanks for joining us at another episode of Arthur's Roundtable. With us today is Richard Wilson. Many of you know him from the Family Office Club. We've known each other for, a long time. And so I'm super grateful that Richard is joining us today. And I forgot to thank you for allowing one of my friends to join your meeting in New York. I really appreciate that.
Sure.
He's super grateful for that as well. So thank you. So Richard has a long history of doing successful conferences for the family office community, not just the people that often are there that are looking to connect with family offices, but family offices themselves. And he's got some adjacent businesses that we'll talk about. And so we're super grateful to have this chat with you today. So Richard, let's start at the beginning.
Sure. Yeah. So basically, I started this in June 2007. And essentially, it started out as just a blog on hedge funds, family offices, and raising capital. And I found out that even though I initially started it with the most focus on hedge funds, that people are most interested in hearing about family offices, raising capital, and then hedge funds was the least interesting to people. So I was like, oh, okay. Well, at age 26, I got in the front page of the Boston Globe. I got flown around to 17 countries for guest talks at different events because the blog had taken off. And I went from blogging once a week to once a day, and then 5 to 10 blog posts a day. And then we started hosting our own events and launching products, and we formalized it into Family Office Club. So the first 3 years was finding our way to 7 figures in revenue. And now 19 years later, we've hosted 300 events and written 13 books, and just we do about 30 events a year now.
Yeah, and the events are global, right? I don't remember exactly where they are. Obviously there's the iconic events that you have in Florida and New York, but where else are they?
Yeah, so we've done events in Toronto, Singapore, and spoken in many countries. But for right now, ever since COVID, we've just been focused on the United States. And so all 30 events are in Dallas, Los Angeles, New York, and Fort Lauderdale. And that way, anywhere you are in the world or anywhere in the United States, it's relatively easy to get to a good portion of our events. And we always start at 10 a.m., which allows people to fly in that morning if they want to, or get their exercise, or their email inbox kind of cleans it up a bit. Because basically we're working with family offices that are super entrepreneurs, ultra wealthy, and we're working with founders who are raising capital, or they have a private equity platform, or a real estate development firm, or a startup, or one of our clients is a $50 million a year roofing company. Those types of folks are very busy, obviously. So it's important for us that we start at 10 a.m. each day that we host an event.
And so I remember this, Richard, early on that you were, and I imagine it's a byproduct of having the blog, were one of the early ones in the family office space that figured out that you can't send attachments or links or it won't get through to your email. Like you were sending text emails rather than having, beautiful content that I'm not saying you didn't do this, but I remember that early on you were making sure it got into people's email inbox.
Right. Yeah. I think that the most important thing to pull out of that, I think, is just that we have been focused on the same thing for 19 years, which is building a platform that adds value first. And then there's 1,000 nuances that go into you need to have a one-liner for anything in the world that you're promoting. You need to have a 1-minute video because the wealthiest people are the most busy. You need to have a one-pager, not just a pitch deck. And your pitch deck can't be 70 pages long, or your own spouse won't read it when you ask them to, right? Things have to be concise and precise and well-positioned, or you just get lost in the world. And part of that is email delivery. Part of it is building up social media following, et cetera.
What have you found? Have you found in the context of getting your constituents to participate, be it the family offices or those entrepreneurs that aren't family offices, or those people who want to glean the interest of family offices, is LinkedIn still an interesting place?
I mean, it saddens me that a percentage of LinkedIn seems to be these auto reply comments that are overly thoughtful and obviously written by AI. LinkedIn needs to drop the hammer on those guys now. because it hurts their reputation a bit. Are the ultra wealthy largely on LinkedIn in some way? Yeah, a lot of them are. We had somebody yesterday that registered for our AI event next week, and they are worth over $100 million. They've had 3 exits, they've had 50 passive investments, and they came in, quote unquote, cold from LinkedIn. So definitely the wealthy are there. And I find people that are over age 50 are more likely to think it's all about the handshake. It's all about the in-person relationship. Forget this digital stuff. It's way overvalued. And the people that are under 30 are like, it's all about the virtual. It's all about AI. It's all, like meeting in person is such a waste of time. And I find that the mix of the two is what's most powerful, to have like a big digital funnel so you can shake more high quality hands in person. And in your big digital funnel, if you leverage like a Robert Cialdini reciprocation and authority positioning and add lots of value to a very specific demographic, and you're the most helpful to them, then it brings and attracts people to you because of like the good karma you create in the niche. And so that's been our model for 19 years. And a lot of people come and go in this industry, as you've seen. Most of them go out of business, get sued out of business, ruin their own reputation doing silly stuff. So I think that's been really our key to success.
Yeah, there's a lot of, let's put it this way, there's something now that we call the attention economy. It's even harder with all this AI slop and
Yeah,
more noise than signal to get people's attention.
totally.
It's you have to really, and I think there's tools to, we found that there's tools to mitigate some of that, but you really have to be thoughtful about, like you said, the one line, the concise message, because you've got, I don't know if it's true in the context of what you and I are doing, but with TikTok, you got like 3 seconds, and we don't participate in TikTok because it's just not anything we're interested in. We could be
Right.
missing something, but it's okay. It's okay if we
Yeah.
miss stuff.
Yeah.
Um, but I think even with all this AI, and let's face it, it writes some really good stuff, but it's really
Sure.
evident that it's been written by AI unless it's
Right.
curated post, right?
Totally. It's like over verbose. It's like over appreciative of your great article and mentions 2 or 3 things from the article to try to prove that it read it when you didn't. But like, I think the other thing is like the investment world has been beat up a bit the last 2 years, right? High interest rates. If you have 30 investments as an investor, probably 2 to 4 turned out to be frauds, and 5 to 7 cut off distributions. A couple lost all your money. A couple aren't communicating with you at all, and you have no idea what's going on. So investors have the taste of their own blood in their mouth. Plus, high interest rates means that the hurdle rate that any investment needs to get them is higher than it used to be, and they're not in the best mood. And the uncertainty index is very high right now. And so when you combine all of that, what it means is banks will lend you less money on a $10 million asset. So you need to raise more money than before. But according to PitchBook, 2.5 times as much capital was raised in 2023 versus 2025. So in other words, it's 2.5 times harder to raise capital. Plus, you need to raise more capital, and you get lost in the ocean of AI slop. So what that means is you need to be like super focused, super clear on who you are, what you're doing, super clear on what the competition is doing, and very careful who you surround yourself with, because the most expensive advice is the wrong advice, right? And so like, oh yeah, great, this event's free. Like, oh great, well, when's the last time you went to a free event that was like super valuable, right? So I think that
It's
those
worth
are all things
exactly
that
what
are,
you paid for it, right?
yeah, yeah. The cheapest is never the best, and the best is never the cheapest is one thing we like to remind people. And we try not to be the most expensive because that just adds friction. But we just find that if you're not dialed in on what you're doing now, the world is harsher on you than it was 2 years ago, where you could just snap your fingers a certain way and raise money for something. That's not the case anymore because of everything we talked about.
Yeah, and it doesn't matter how good your deck is, how good the team is. And this is my editorial, and you can agree or disagree, but uh, the the storytelling is still paramount.
Right. Yeah, totally. And also, like, anybody can put anything on a piece of paper. Anybody can make a deck look pretty and promise a 23% IRR, say you're going to get 2.3x, and say we have a world class team with 900 years experience. Like, it all means absolutely nothing if they don't trust you. So, like, you need something unique to get their attention, but then like you have to meet in person. And Robert Cialdini has scientifically proven you're 16 times as likely to close a deal if you meet somebody in person. And that's for any type of transaction. That's for buying a watch, that's for buying a car, it's for buying a vacuum. Imagine if you are selecting your spouse or buying a house or putting $1 million into a deal or 10 million. Do you want to meet the founder in person or meet that spouse in person one time at least? Yeah, of course you would, right? So it's like way more than 16x. And that those stats were all done before AI could fake everything. So is it 100x more likely? I don't know. Like nobody knows, right? But it's way more than 16x more likely, you know?
Yeah, look, I have some compassion for people that are likely to lose their jobs as a result of AI. I think there's
Yeah.
pivots that are available, but I also am encouraged because uh, most people that I know that are successful operate the way you just described, and the handshake is still paramount. I mean, you just can't. No one's writing checks blindly. And I don't care how much money you have on your balance sheet. I don't care
Yeah.
whether you're a venture fund that you need to deploy capital. There's there's it's highly unlikely that someone's cutting a check without looking somebody in the eye.
Right. Yeah, for sure. The more you get beyond like just a 1 to 5 or $10,000 check, then people want to meet in person. And oftentimes more due diligence is required. The more capital you're asking from somebody, more trust is required. So at the end of the day, it's about how to craft a unique position that attracts opportunities, deal flow, and capital to you. And how do you have a credible long-term focus that builds trust and is different than everyone else? Like Peter Thiel says, if you have 3 to 5 or 10 competitors, you've really screwed up somewhere along the way. Like you've really made some poor decisions. So like be as unique as Palantir or more is basically what he always says.
Yeah, that wise words from Peter, no doubt.
Yeah.
So talk about a little bit about, but beyond the conferences, the things that you do for your constituents, your members, your people who find value in what you're doing.
Yeah, sure. So one thing that confuses people often is like, if you're a member, all the 30 events are free. Our core 50 AI tools are free. Our 2,000 investor talks in our portal are free and included. We've got investor summits and investor mandates recorded in the portal. Like all that's included. People get confused and think they have to also pay for events, but it's all included. Beyond that, that's really what we're focused on, is trying to build like the best community of family offices and founders in the world. And we have 16 million registered members in our LinkedIn groups. So we have more members in our LinkedIn groups than anyone else in the world. And some months we have like 50,000, some months 100,000 posts in the LinkedIn groups in a single month, and they'll get like 100 million views. But it's not all our content; it's just all the members posting stuff. And so it takes up like a lot of our energy just managing all of that and 30 events. And I go to every one of the events. So like we've got 4 events next week. And we're starting in Fort Lauderdale, putting on an AI implementation workshop, and then I'll be in New York the next day, and then Dallas, and I have 1 day breathing room, and then in LA on Friday. So that does take up most of my time, but we do help put together and help launch family offices, like single family offices for folks. And sometimes it's just helping them formalize their family office, and they already have parts of it in place. Other times it's helping them source transactions from the 16 million, online members and the several thousand people that come to our 30 live events a year. But many times it's a mix of things. They need help structuring deals. They need help sourcing deals, negotiating terms, selecting service providers, defining their values, and leveraging AI because they have like a lean team for how wealthy they are. They might only have like 1 to 4 true full-time professionals inside their single family office many times. And so, we do that, and that's a large part of what we do besides just running the events. And then we have a division called Expense Audit. And Expense Audit is a business where basically it's a cost reduction service. So we're starting to work with a 800 million in revenue restaurant, a roofing company doing tens of millions a year, a series of dental practices doing about 30 million a year. And we go and help them renegotiate vendor agreements and like merchant account services, health insurance, different software that they're using, and help renegotiate that to reduce their their costs. And we find that usually the CFO and their accountant is way too busy to go vendor by vendor and help them optimize that to help them with their bottom line. So that's really what we focus on. But 80% of it is just running the events and trying to have the best community possible of founders and family offices.
So I want to talk about how you came about that business, but hang on. The AI tools that you're referencing, can you talk a little bit more
Yeah.
about that?
Yeah. So I have spent well over 1,000 hours developing these. And about 20 months ago, we had 0 tools. Then we created a tool where we transcribed every public talk from billionaires publicly available, plus the 42 interviews I've done on billionaires.com, my media website on billionaires. And we combine them all into an AI tool where you could chat with the collective intelligence of billionaires, and it gives you feedback and then tells you the quote that feedback came from, that advice. That was popular. So we created a due diligence tool, analyzes any deal 25 different ways. We created an agent for that. So when you get a deal in your inbox, our clients or members can just literally forward the email to a special email address, and the agent will analyze it and send them back like a score and a whole analysis of it. So it almost acts like one of your team members analyzing deals that you get pitched. And when that started to take off, we realized, hey, this is something our members really love. So we created a series of 50 different tools. We have a tool that writes 7 one-liners for you. We have a tool with 1,000 deal structures in a library. You say what you're negotiating to buy or sell an asset, and it pumps out 10 deal structures. And you say, I like number 2 and 4. Show me 10 more like that. And you do that over and over again until there's an amazing deal structure. And then we'll write the email to the counterparty explaining each part of the deal structure and showing how it's a win-win. So I won't go through all the 50 and bore people to death, but we built like 50 of our own AI tools that are like that, very functional, practical, watching $1 billion of deals getting done in Family Office Club. We codified what we learned into the 50 AI tools. And then the other thing we built that we're rolling out is right now and is fully active for our team is a kind of an enterprise quality super intelligence operating system. So it's based off of Claude. It could be adapted for GPT, but it's based off of Claude. And it basically builds out an intelligence center for each major part of your business with 7 functions custom dialed into that division of your business. And then you have a CEO intelligence center for the head of the family office or founder that oversees all the intelligence centers, and it all reports to a shared Slack channel. So there's ongoing memory and learning going on, and you can see how your team is using the tools. And if you don't do it that way, Claude just tells you like who used the tool. Like you don't get any insight on how they used it or how often or what they said. Or so we call that our super intelligence operating system. And we've been spending a ton of time on that the last 18 months. Been helpful.
We don't need to get into the weeds, but did you do it with Notion so it keeps the memory and have a chassis for it and not just the Slack for memory?
Yeah, I mean, what we have right now is a version of Slack that has infinite like memory going back in time, memory ability. So we're writing to a Slack channel that can be searched like a Notion box, like a Notion project or Notepad, etc. But yeah, we found that is something that I bet Claude is going to patch that soon. Like Claude's probably just going to like buy Obsidian or buy Notion or, you know what I mean? It's like they're worth $1 trillion. Like, why do we even have to patch together some of these things when they're spending like $1 billion per day on data centers? They should just buy one of these platforms for 30 billion or 50 billion and make everyone's lives more simple on the memory side, right?
Yeah, it's going to happen. It happens. Everything's happening so fast. It's a great time to be alive.
Yeah.
That product, is it subscription based, and or is it part of the club?
Yeah, it's all part of the membership. Yeah, basically, like if you're a member, it's kind of like Netflix, but instead of videos you can stream, you get the 30 live events a year. And like most of our members only come to like 4 to 5 events a year. Maybe we've got a couple that come to 10, but there's 30 across the country to make it easy to use your membership. But you can also stream the 2000 Decamillionaire, Centimillionaire talks in the portal. You can also use the AI tools. And if all you did was use the AI tools and you never came to an event, you never streamed a video, like it'd be massively helpful. It's just everybody's busy and not everyone wants AI tools right now. They want live events or they want to participate virtually from Germany or whatever, you know?
Yeah. So, Richard, you don't have to disclose the stats, but are people using the AI tools?
Oh yeah, we've had over 30,000 uses of the AI tools. And so, if you ask AI, it'll say something ridiculous like, "Oh, that's equal to 27 years of full-time employees working for you." But like, you know, it's like some of the work done, the main point is like some people think of AI as like, how do I write something quickly, or how do I like skip steps or not have to think? But the biggest use of AI I found is how to be more thorough and more effective, right? Like how to get a deal structure that's win-win for everybody, how to design your positioning that sucks people into your world and they want to work with you because it's so unique what you offer versus others. And how do you focus your time as a founder to scale your balance sheet and net worth like a centimillionaire does, and not scatter your energy, right? So I find that that is the best use. And so, but yeah, we've had about 30,000 uses of the tools over the last 18 months, and they're almost all just restricted to our members.
Yeah, and is this when we're using some of these AI tools, we have a method or an option so it's not learning on our data. Is
Yeah.
that true for you as well?
Yeah, with Claude Teams, that comes by default. If you have a
Yeah.
Claude Max profile, you have to unclick a button that says allow, Anthropic to train on my data, and that's true with most. It mostly comes default opted in. But going along with that, it's like some people are like freaked out by the whole thing. They're like, "Oh my god!" Like even if I unclick that, I don't want to have my stuff in there and like provide a contract in there. Are you crazy? That'd be stupid. But one of the top three AI companies in the world, arguably, is Google. People laughed at them 3 years ago because they were behind. Now they're really caught up. And I think that the reality is Google is one of the biggest AI companies, and your Gmails are in Google. Microsoft is a top seven, depending on who you ask. And like your emails are in Outlook or Gmail, like
They're
almost for
already
sure, right?
there. They're already
Yeah.
there.
And like your smart TV is taking pictures of you while you watch Netflix to see your facial reaction. And like 19 foreign countries are listening to our podcast interview now, probably, right? So it's kind of like, I wouldn't say anything out loud that you don't want recorded on 50 servers, right?
Exactly. So I don't mind sharing with you. We wouldn't have done this podcast because we have bandwidth issues because we have prioritized things that we do. And
Yeah.
when said that maybe we should do this, the only way that we can do this, because we're not paying an editor to do stuff manually, it's just not going to happen. And
Yeah.
so the when we push out this content, we review it, but in large part, it's all done by AI. The show
Right.
notes, the clips, everything is done by AI. And had it not been available in this short period of time, in the last 18 months, for example, we would have just bailed on the podcast. It would just, it's way too much work. Yeah. Right.
Totally. Totally. It is a lot of work. And I think that what takes a lot of judgment is that with AI, there's more possibilities. With AI, you feel like you can get way more done. But like one thing that I know from my three daughters is true is that no matter what changes in the world, the laws of the universe will only get tweaked a little bit. Like if you study physics, like that's literally how the universe works. And so one law of physics is that if you drop mass, you gain velocity. And one of my favorite quotes is that clarity multiplies action. And so getting more clear and using AI to learn faster, but staying hyper focused is really important. And another law of physics is that with the same amount of pressure applied over a wide area, the actual force is small. But if you apply that same pressure in a very narrow area, then it's a massive amount, of pressure or force applied there, And so I think that studying, making sure that you use AI to learn faster and become even more focused when the whole world is distracted and doesn't have the attention span of a goldfish, like you were talking about earlier at 4 seconds. Like the world is just like brain rot was the word of the year 2 years ago because everyone's just scrolling on
Doom
Instagram and like,
scrolling. Yeah. Yeah.
yeah, it's crazy.
It is. It's really, uh, I asked you about LinkedIn because without a lot of effort, we can still point to LinkedIn as a place where we glean some interesting connectivity that
Sure.
then spawns into real connections. And it also is kind of like the old days when if you didn't have a website, that was your yellow pages. At least if you had a website, that means
Yeah.
you're at least you're starting to realize you have the sense that someone might have the sense that you're real. So
Right.
LinkedIn is more or less the directory, right?
Right. Totally.
Yeah. So
Yeah. And I
it's
think that people like to see a face with a name. I think like a lot of people fail to be optimizing their communications. Like if you go to a large event, you probably should have your face on a business card so people remember who you are by your image just as much as your name. And same on LinkedIn. It has the headshot. You get to see a little bit of their history. It's just added context. And without context, there's just no trust, right? So I think it just adds to the level of trust. You know, when somebody has a LinkedIn profile and there's no headshot on there and there's nothing else on there, it's not the end of the world, but it helps to know who you're working with, right? Is this person 16 years old, or does it look like they've like had enough time in life to learn one or two things? You know, like it's just helpful information to have, you know? Do they look
yeah, and
stressed out?
there's
Like, you know?
they look right, anxiety ridden. You know,
Yeah,
I admit that I don't manage my LinkedIn for most of the time. So
sure.
we have things that we have agreed on. Like if someone doesn't have a picture, then it's probably I don't care how interesting they are. I'm probably not going to have it accepted as a connection, just because
Right.
it's lame. It's just lazy,
Yeah.
right?
That's just
I
lazy.
think. Now,
Totally.
on the other hand, people are worried about security and family and kids, and so I get that. But
Right.
you're probably not on LinkedIn if you're that worried about it, right?
Right. Right. Yeah, for sure. I mean, security stuff is a valid concern. I can see if a family is worth tens and tens of millions of dollars or made their money in crypto or feel targeted or politicized, you know, then you go into hide under rock mode for very valid reasons. I 100% get that. But in the normal course of business, that doesn't describe 99.99% of founders out there,
It's
you know?
true. It's true. So
Yeah.
what else uh, in the so business is a moving target, right? Oftentimes, even though you made it clear that you're focused on delivering value, and I understand all that, but what do you see trending right now? And I'm not asking the question that I often get asked: What are family offices investing in? I mean, it's a silly question, right?
Sure. Yeah.
Uh, but what I'm asking is, what do you find interesting now, aside from
Mm.
AI, for example, that you find yourself thinking about focusing on?
Yeah. I think that families want to have 10 to 30 million dollars in 1 to 2 or 3 foreign countries in trusts that have never been pierced by a US court or judge or lawsuit, so that no matter what happens, they've got 10 to 30 million dollars of start over money. And I just use that number because a lot of families we work with are sometimes worth 500, like 50 to 500 million. We have a billionaire we've done 19 transactions with and helped source many things from our community for. I'm sure he would want more than 10 to 30 million of start over money. But for many families, having that in at least one foreign jurisdiction, super protected, comes up more now the last 2 years than it did before. Farmland, the ability for the family to have like a farm multi-structure compound somewhere that feels safe, and 1 or 2 secure residential type assets has come up more often the last couple of years. And then, of course, no surprise to anyone that Bitcoin and gold has been coming up more. I mean, everyone's seen what's happened with those assets, so no shocker there. But I think that the most important thing that families need to hear that are listening that have never gone through formalizing their family office is that what I found is that the most successful entrepreneurial families, they have 1 to 3 wealth advisors that pretty much all play the same diversify everything beat of the drum. And sometimes they'll slant it towards passive income or consider what you like and don't like, of course, but like they help you diversify. And then a lot of families invest in real estate, private equity that's mostly cash flowing. And a lot of families don't like extreme bet on those things. They want like moderate risk, moderate returns. But the most important part to hear is that like many families forget to still play offense in the industry where they made their money. Like if you exited your dental practice for $50 million because you had 8 locations, whatever, or your auto dealerships, You may not want to ever practice dentistry again. I get that, or own an auto dealership again. But every 2 to 4 location dry cleaner, if you sold your 50 dry cleaners, wants to be you when they grow up. And you can invest money and get access to deals that nobody else gets access to because they weren't really raising capital, but they'd love for you to be part of the platform. Or they're raising capital at a 12 million valuation and you can get in at 4 million, or they'll give you 2% advisory shares for free. Then you could also buy 10% of their company and you can help them play offense and defense. And so what I'm saying is, like, you've got public markets, pure defense almost. You've got private equity real estate that tracks inflation, hopefully does well for you in a diversified basket, but not as diversified. But the most focused area that other people would think is most risky could just be 5 to 10 or 20% of your net worth, but it might double, triple your net worth over time, because that is where you have an unfair advantage. You have distribution, you have relationships, you have expertise, you have 30,000 hours there. So playing offense there is super important. And it's usually where the entrepreneurial first gen people have the most fun, is how to be strategically investing into companies related to the niche where they made their wealth, and they can spike up and have more 10 million, $100 million plus exits.
Yeah, totally makes sense. We've seen that, Richard. I think that's really wise advice. It's back to do what you know, right? You don't have to run the dental practice, as you say, but you can leverage your experience and help somebody go from a $5 million company to a $30 million company faster than they would otherwise do it themselves, and participate in the spoils depending on the type of person you get involved with that's open to that sort of thing. And then
Yeah.
the you articulated it well, and I'm not judging you. I'm just saying I agree. Is that there's the stay rich money, which is the stock market, the public equities, which is often touted by the people who get paid to do that, and it's a good thing.
Right.
Uh,
Right.
and then on the real estate asset class is super interesting because it comes along with lots of goodies,
Right.
cash flowing, and depreciation and cost seg and all that. You can ultimately push the tax out for a very long time. Are you still finding, even in those? Are you finding in the first to second generation families that they still want to have a slice of real estate in there because of all the goodies that come along with it?
Yeah, for sure. I still find a ton of interest in real estate. Even, like, it's probably a complaint we get sometimes, because like a private equity, venture capital, or a founder of an operating business will come in and be like, oh, well, I've got this HVAC roll up or whatever they have. And they're like, why does real estate come up so much? Are you guys just focused on real estate? And it's almost like they're complaining about gravity on planet Earth, because, like, if a family made their money in dentistry or dry cleaning or biotech, they all want some real estate. It's just like a hard asset that brings out money and always has gone up over 10, 30-year periods, pretty much, unless you bought at the absolute wrong time in the wrong place or something and bought condos or something. And so basically, like, we can't help that is gravity on planet Earth. Like, in the family office space, people are going to want a little bit of real estate, right? And so it's like complaining about tax planning. It's like, yeah, they probably should have some tax planning, right? And so I think it'll always come up and always has been. But what's fascinating to watch is two things. One, that 30, 40 years ago in the public markets, almost all the value of the most expensive stocks was about their manufacturing plants, their real estate, their physical assets. Now you look at the fastest growing company, the new billionaire lists, much fewer of them come from real estate, from manufacturing, from hard goods. Much more of them come from digital goods, digital assets. But despite that, the average person doesn't value digital assets as highly as they should. That's just a super interesting thing to see. And then the other thing is that a lot of the wealthiest families I know are really good at acquiring, like, strategic choke points, where if you acquire that, you get massive distribution. Or if you acquire this one asset, now you get more deal flow, more access to capital, you get better research, you get more high conviction due diligence. And a lot of people start working in their business and they're taught to work on their business, but having a family office is working on your businesses and figuring out how you can dominate a niche sandbox and play a different game than everybody else. And so helping founders play the strongest game they can with their DNA and their passion, their track record, and helping them play that game well and have that game be unique from others is what Family Office Club is all about. So we always say that we're about proximity, like proximity to wealth, super intelligence, AI tools, and then scaling. And scaling is all about deal flow, choke points, vetting partners, navigating your own extreme focus and how to scale up, getting distribution, etc.
So it's clear that the value of the members who want to connect with family office is, that value is clear, being part of the club. Is what you just described the value that uh, for the family office members doing that sort of thing on an ad hoc basis for them, like for consulting fees or something like that? I don't need to, like I said, dig too deep, but I'm just, does
Yeah.
that just happen? I mean, it
Yeah. I mean,
obviously
I think
takes
that,
effort, but
sure. Yeah. I mean, one thing that's very much true is that the wealthy founders who've had multiple exits or single family offices that come to our events, they like connecting with each other for sure. They like leveraging the AI tools. We've had one centimillionaire randomly said on stage that he fired his executive assistant who was just screening deals for him. And now our Dewey AI due diligence tool does it for free 24/7 more thoroughly. And he reallocated that money and hired a controller who adds much more value for just a little bit more money. He got a controller, and like the AI tool can do the lower level work now. And so they like the AI tools. They like connecting with each other. They like seeing higher quality deal flow. So for the most valuable families coming to our events, we'll look at the 532 people that were at our event in New York 10 days ago, and we'll read the bio of every single one. And then we'll see what are the 3 to 4 people in the room out of 532 that are exactly what they're looking for. And then they're not just at the event, like bumping into random people and hearing random pitches. And like, it's like every other investment event where it's a zoo of people or a total waste of time. We do 5 to 15-minute talks at our events. All the sponsors just get 5 minutes talks on stage. So it's very fast moving. And then we make sure they make some valuable connections. And then only if we get to know them, we really enjoy working with them, and they really need help setting up or formalizing their family office, then okay, we're happy to work with them either on setting that up and working with on a much more close basis, or if they want to do a cost reduction process, like for expense audit, we have like a process for going through that, helping them renegotiate their vendor agreements so they waste less money on wealth management or merchant account processing or whatever it is.
yeah, just a unsolicited review by somebody I know that went to the New York thing that we're working with and have for a few years, was bragging about how good your post the conference was good, but the technology to connect with people post conference was he was suggesting that it's really good.
Awesome. Yeah. Appreciate you saying that. We operated on one membership platform for about half a decade, and we just moved over to a new modern, like mobile app driven platform, and all of our AI tools are in there, all the videos. So you can walk around and just with your mobile phone, you could just stream the interviews we've done with billionaires. And to be able to access nowadays an AI tool in videos where you can literally get feedback from billionaires and stream their thoughts and emulate them and have that at a touch of your fingers is like, it's crazy that that's even possible. So we're excited by it. And, but people really join for the in-person events, because nowadays anything digital gets commodified a bit. It's kind of like, the in-person is where the real magic happens, right?
Richard, how many times have you and I heard some developer in this part of the world or another part of the world bragging about how he's got the technology that's going to connect people in a digital way, and it never works, right?
Totally. Yeah. Thousands of times. And like the more AI takes off, the more that IRL, like in real life,
Yeah.
becomes more valuable, because you can spin up and create any app you want with some vibe coding lovable platform or Claude Code if you know what you're doing halfway and stuff like that. But like to fly around and deal with the hassles of spending $800,000 a year on chicken and scrambled eggs and organizing the event team and getting everyone to show up and getting, we had 75 speakers on stage at our New York event, and at our annual event, we have 125 speakers on stage. And it's a lot of like chaos to manage, right? It's not easy. Just like you doing the podcast, it's not as easy as it looks. And so to do what you've done consistently over time is what's hard. Like, and that's what separates you from others. For and every family office listening already knows that, but like for anyone that's younger or like next gen, it's performing at a high level with extreme focus over a sustained long amount of time that sets you apart from everyone else who gets distracted every year with like, oh, mobile apps, oh, crypto, oh, gold, oh,
Yeah.
vibe coding, like whatever, you know.
Shiny objects. Yeah. Yeah.
Yeah.
It's really, it was the interview with Bill Gates and Warren Buffett, independent of what Bill said the other day in Congress.
Yeah.
But I think it was Charlie Rose, and independent of what me Charlie Rose got me too'd, was he Charlie Rose said to each to them, they were together in this interview, and said, "What's in one word? What's the most important thing about business?" And they both said it simultaneously: focus.
Focus. Yep. 100%. Yeah. And like, my friend Eben Pagan is the one who taught me like clarity multiplies action. And the most important thing about that is that like if you are clear with what you're trying to get done, then you take more action yourself. Your team also takes more action if they're clear on where you're going, and the world around you will organize itself around you and opt in or out if they're super clear about what you stand for and what you're trying to do. If it's murky, they just don't even notice you exist most of the time, and you can't even take action on stuff. And so I have like a one pager I laminate, and I update it every month, and I train my AI tools to base its responses off of this one pager. And the one pager is my monthly, quarterly, annual goals, and then about 35 to 40 mental models I want to operate on. And I read that while I'm shaving every morning. So I know what summit I'm headed towards, like the monthly, quarterly, annual goals, and then how I'm going to get there with the mental models. And then all my AI tools are customized to keep that in mind. And I update it each month so that my daily AI task management tool and my planning tools and my customization settings and Claude, et cetera, are all customized based on that roadmap. And that's like a really easy, free, practical thing. If anyone wants like a template of my dashboard, I give it out all the time at events and stuff. And I'd be happy to email it to anyone who wants it so they could implement that for themselves.
Yeah, it's super valuable. Can you imagine what we had to do before AI? Like we had to manually update that. It was just incredibly efficient now.
Yeah. Yeah, for sure. I think that that's the thing is that some people have such a negative view. I mean, like some people have a negative view just of life in general, of course, but like some people just have a surprisingly negative view of AI, and they're like, it's just rotting people's brains. They don't use their brains anymore. And it's like saying, oh, bicycles exist and cars do. So everybody is going to instantly get obese and never use their legs. It's like, well, if you want to go from LA to New York to come to an event, good luck only walking. Like you'll take quite a
Right.
bit of time, right? So sometimes it's appropriate to use technology. Sometimes you got to use your legs or your brain. What I find is that the top 0.1%, the super founders out there, they use AI to learn faster, be more thorough, more accurate, double check what people are telling them, do their homework before walking into a meeting, negotiate enterprise level accounts with vendors, leveraging AI, et cetera. And because they're able to be more thorough and faster and more effective, they can just like learn faster using it. And their brain is still going the same 80 miles per hour that it always has, but it just gets more done with that 80 miles per hour. And some people just choose to be lazy and they'll be ever dumber because of AI. But then some people are going to be ever smarter, and that is going to create more of a divide, I think, than anything else.
I hope not, but I think you're right. The gap could widen, but it will widen, I think, because people do exactly what you said, is that they dismiss it out of hand without recognizing that at their fingertips, they have the collective knowledge of the world at their hand,
Yeah,
and it's getting better and smarter every day. And it's epically smart already.
yeah,
And even if you're just a very pedestrian user with ChatGTP or Perplexity or Claude or any of them, you can just write a prompt that says, "You're the smartest IP attorney on the planet, and here's your challenge." And I mean, you can simply say that to them, and it'll do the work.
oh yeah, Yeah, it's a great equalizer for someone who's hardworking and thoughtful and willing to try things and take some risks in life. And like, I think it will lift people out of poverty from around the world who never had that chance before. It's an amazing equalizer. I also think I'm like a huge fan of capitalism. I mean, if you look at 40 years ago or 140 years ago, like the standard of living and the number of people as a percentage in the world that are in dire poverty and starving to death continues to go down. And I hope that will still be the case for sure. But I just see like an exciting opportunity for those, like you said, whether you're ultra wealthy listening to this, or if you're like one of my clients who came to our club, had never raised capital. He raised $10 million. His name's Michael Scott. And then he had a $100 million exit 3 years later. And he said that he was lucky to have a PhD growing up. He was poor, hungry, and driven. And like, honestly, if you have that combination and you're willing to learn and always be learning, then like AI is your friend, right? So I think that you just have to stay with that mindset. Like if you're pessimistic, you might be right most of the time, but it's the optimists who create all the wealth in the world.
No, no doubt. Yeah, Musk said you could be a pessimist, but and be right, but if you're an optimist and you're wrong, you're still better off, right?
Yeah, totally. And like, who was it? Like Jocko, I forget his last name, but like Jocko, the Navy SEAL guy, he's like a Goggins type character out there and pretty smart guy. But he said something the other day I saw in a video. He said that when you're practicing, you have to be humble day to day. You have to assume that you don't know enough and always be learning more and always be studying and always self-improving, always training hard. But then when it comes time for performance, you need to be confident and really strive to win and have the confidence and having that humble learning mentality day to day of getting better and sharper. I think is super important.
Yeah, look, and I'm Greek, but I was born here, and so I
Yeah,
look back. It's just kind of like what you built with the billionaires before AI caught on to what it is. I said, wouldn't it be awesome if we had Aristotle, Socrates, and all these
right.
people's wisdom built into an AI, and you could have a conversation with them and present them with a problem. Well, we have it. Like all of a sudden, it just
Yeah,
appeared, right? Um,
yeah,
but the even the Buddhist said, as soon as you realize you know nothing, you're in good shape, right? You just keep
right.
on learning, right? Uh,
Yeah,
it's
totally.
what do you think is happening with? So I didn't coin this phrase and only recognize it because other people are talking about it, like Mark Andreessen, and he was just in the Silicon Valley. There's a new thing called a vibe, a coding vampire, right?
Yeah,
And it's not necessarily the coders; it's the engineers and entrepreneurs that are building, and they're so pumped because for years they wanted to build their favorite thing, whether it was a
yeah,
business or a project, and they set an agent up and then they have an agent run it and then they go, okay, now what can I do while that's running? And so nobody wants to
totally,
sleep, right? Because they can
totally.
get all this shit done. It's crazy.
I can relate to that. I've gotten up, like I'm in Hawaii, so I always get up pretty early. Like if I sleep in, it's because it's 5:30 a.m. or something like that. Like I get up as early as 1:30 in the morning and many times at 3 a.m. sharp. And my team is East Coast, so it can be up to 6 hours after me. So it's not that early East Coast time. But sometimes when you're working on things and you're making progress on multiple threads at once, it's consuming and firing off multiple parts of your brain that is like a dopamine rush because you are learning and you can feel that you're learning and you can see the strategic progress and you're taking something that the team used to take 12 minutes or let's just say like just 2 or 3 minutes to go look up and be like, all right, who is this person? Should I approve them to speak at the event? What's their background? Are they a risk to our platform? Are they more of an investor or someone raising capital? But now the AI tool can search for 20 things at once, which is more than the 6 that my team would ever look for, and in 30 seconds give us a confidence interval on who they are, their background, their reputation, are they a heavy hitter, their credibility level, their net worth estimate, signs of wealth, all of that in like 30, 40 seconds.
It's
And like,
crazy.
so when you create that, you know that you've created a little brick of value to build your AI foundation on because you've turned an old process into an instant 30-second little machine And now that machine is going to work for you every time, which is like multiple times a day. And it's like, you're like, holy crap. And then you're just like, I got to build 100 more of these. And then like,
Exactly. Yeah.
that's like how you get addicted to it. And some people will listen to that and be like, oh, Richard's crazy. He's training these models to learn his whole business. But there's so much judgment day to day still required. There's so much showing up in person that like a lot of life is actually showing up and also being a human being that people can relate to, that they enjoy being around. Like you can't just be a super nerd. No one's going to want to do business with you or trust you.
Yeah. Yeah. Look, there's people that are being paid $50 million a year that are no Codex and Cursor inside out and are working for Google and Anthropic and Grok. I mean, that's a
Totally.
different person altogether. I
Yeah.
will tell you that I didn't expect this, but as a result of AI, and I was doing it on a very selective basis, not that I'm so selective, I'm just saying it was only a couple of things. Because we've seen so much deal flow over the years, and I'm just a private investor. That's what I do most of my time.
Yeah.
Right?
Yeah.
And I have gotten to be pretty good at asking the right questions, right?
Right.
And looking people in the eye and getting a vibe. And, I've been
Totally.
operating on my gut for as long as I've known, right?
Yeah.
So if you take that, all the AI intelligence, and then you can dispense with all the analyst work that normally would be, just a slog, and then you get to meet somebody, and then you can make a judgment based on all that analyst work and the vibe that you get. What has
Mm.
happened is that I'm been hired to sit and meet with people like what would arguably have been the role of an investment committee member,
Right.
but to sit down and in person meet with somebody that somebody's just about to deploy some capital and give them feedback just because I've been doing it for so long, not because I'm super good at it necessarily,
Yeah.
but just the Socratic method, right?
Sure. Yeah, for sure. I mean, if you think about it, there's a Harvard Business Review article that said, should you trust your gut? And then the answer was basically, well, it depends on what your gut is made out of. And like, well, your gut is made out of like 30 years of vetting founders and private deals and real estate and private equity and all of that. And if you think about it, your brain is almost like an LLM and it has all these inputs, but your brain is ridiculously more powerful and efficient than an LLM is in terms of energy usage for high quality output. And so your internal brain LLM has been trained for decades and decades at this ridiculous level of efficiency. And you can't calculate all the neurons firing and memories that are being combined into like general rules and mental models that you operate on. But it's basically like you don't want to rely only upon AI or only on your gut these days. It's like because the AI has this ridiculous search of data and best practices. And so when you combine the two, that's when you get great results. And I just find that like now before I get on a call with someone, I want to see their materials so I can analyze everything, ask 5 questions ahead of time over email, see what their answers are, maybe ask 3 to 5 more questions, and then get on a call because 99% of the time it's a fit for somebody else, not me, or it's just a decline because yes, I love medical practices, but I'm just not currently investing in them if they're based in Australia or China or something. And so like
Mhm.
some people don't disclose all the details up front and like, oh, you're losing $4 million a month. Okay, so let's not get on the phone because I'd rather just focus on people that aren't losing that much money per month or something, right? And like you end up wasting so much time as an investor realizing, oh, if I'd known that up front, I would have never gotten on this call. And so that's part of the value of AI too.
So one of the things I wrote many years ago, Richard, uh, as a result of somebody wanting me to write a newsletter. I don't know, you know Agora Publishing?
Mm-hmm.
Agora does all these newsletters.
Huge.
And the guy that started that, I know his name's Bill Bonner. And he started by writing it was secret hideaways. And we put it in snail mail. And it was just
Yep.
enough below the stamp cost in a bulk rate.
Okay.
and
Yeah.
it was funnel marketing at its the beginning. It was 37 pages of all kinds of print, and if you got to the end, you were giving them $35. So the whole idea was he wanted you to opt out, but if you made it to the end, you would give him $35. So that was the whole
I
funnel
see.
marketing thing. So anyway, he
Yeah.
asked me to write something, and so I wrote something. And one of the things, it was like this, but the Bavella seven principles, and the number one principle was tell me the bad news first. Right? When
Right.
you're talking to somebody that's a family office or an investor, don't wait till the end to tell me the bad news. Tell me the bad news now, because
Right.
if you wait till the end and it's bad news that's going to make me opt out or not even consider it, I'm pissed. Like there's no
Right.
hope, right?
Yeah. 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 For
So,
sure. And like in Dr. Cialdini is like the godfather of influence and persuasion. He always says like address the elephant in the room. And so, you might not want it to be the first half sentence out of your mind, out of your mouth, but like when you're talking about like the 5 to 7 things about your company, admit what's not perfect or what's not ideal, like, hey, by the way, I had a partner for 5 years and then they left, but our strategy has stayed the same or whatever, and like, if you don't admit that, then people are almost like, all right, well, what's the catch? Or is there something bad? Like, what are they hiding? So it's just better to disclose for multiple reasons.
no, disclosure is king. There's no doubt about it. So,
Yeah.
if there's something that somebody who's listening to this could do or reach out to you about, what would that be that would be helpful to you?
Couple of things. I mean, if anyone is wanting to be in a community of founders and family offices, I'm happy to answer their questions and just make things clear. Sometimes, we get questions often about like, what do we talk about at the events or who speaks on stage or whatever. We have a lot of details on familyoffices.com, but if they want to reach out directly, I'm happy to have them do so. But then also, if they're looking to set up or formalize their family office, I'm happy to help with that. If anyone wants free access to our Billionaire Collective Intelligence AI tool or one of our other AI tools, just let me know. We have 50 of them. So we often are giving out a link for free to a couple of those just so people can play around with them and see that they're real and super powerful. And then the only final thing would be that if somebody is doing 10 million plus a year in revenue, and even more so if they're doing 50 or 100 million plus in revenue, we have a analyst as well as software and like an iterative AI process as well that we use for negotiating vendor agreements. And yesterday we signed a $250,000 contract, and it's a enterprise agreement with a vendor that everyone would recognize. And we got 52.5% off the publicly listed enterprise pricing. And part of this is just running businesses for 19 years and watching how centimillionaires negotiate with folks. And part of it is leveraging our network. Because we have 16 million members in our LinkedIn groups and we run all these events, many times we can secure some family office quality pricing. And if we can do that for one client, then we do that for others in our network. And we have family offices that have their own merchant account processing company, and they want to give people an amazing rate to win them over. We have people in the insurance business. So like if a family office has that as an operating business, they win by getting a client, and we win at expense audit by helping people reduce their cost by, $500,000 a year or $250,000 a year on that one area or overall in their business. And that the details on that are at expenseaudit.com. But that's a fun business because it's no risk to our clients. So basically, like if we don't save them like hundreds of thousands of dollars or whatever, there's basically no fee until we save them on that spend. And we just find that in this environment that family offices love that idea because of inflation. And many times you get like family office pricing everywhere you go, and they just like triple the price or 10x the price you should be paying for stuff, and it's obnoxious, right? So
So is it operate like the traditional negotiation where you get a percentage of the savings?
yeah, it's basically no retainer, no cost up front, no consulting fee for that part of what we do. It's usually tacked on when we're helping a family office create their family office, but we can do it separately as well. But it's basically just only after we've saved them money, we get a percentage of what we save them.
And if it's an operating business that has nothing to do with a family office, it's just an operating business of an entrepreneur, it's the same, it applies the same way, right?
Yeah, exactly. And that's like the most common use case. It's just with a family office, they're often paying a retail wealth management fee, which is sometimes 5 times more than they should be paying if they're ultra wealthy. And they should get more institutional pricing. And sometimes they just don't know what they don't know there. And sometimes it just takes like dog birding each one, following up 30 times, and like getting it done with the team and just being iterative and focused on it. And so we have some approaches we've found work well for that, and some partners that are eager to help in those areas.
Yeah, without revealing, there was a big business when there was competitive for long distance services where you could negotiate somebody's VoIP or whatever it was.
Yeah,
It's not like that, but are you finding that it's uh, wealth management fees is the low hanging fruit? Is you don't have to disclose your secret sauce, but
sure.
SaaS like Salesforce and where are you
Yeah.
finding the majority of the savings?
I mean, we're finding it's industry specific, but common areas is related to health insurance, software vendor subscriptions. We look at like favored nation clauses and length of the agreements, and we look at ways we could make it good for the vendor because we have such a large community, and we can press that lever. And the lever gets pressed in two ways. It's leverage because we're the largest community of family offices and founders in the world, and then we can use that to get that vendor more clients. If they do well by us for this one client, we could refer you to many other families that are worth tens of millions or hundreds of millions of dollars. So it's going to be good for you to work with us. And the other leverage is, as I mentioned before, if somebody has, like, I interviewed a centimillionaire on stage who just sold his third company to a large bank for almost 100 million, and he has a merchant account processing company. So he can decide what rates he's going to charge to his clients, and he wants to win over an 800 million a year in revenue restaurant. So he's going to offer a dang sharp rate compared to what maybe somebody is paying right now, and could save someone a couple $100,000 a year in fees just on that one area.
Yeah, merchant cash advances, lots of margin in that oftentimes, especially with restaurants, right?
Yeah, yeah. I mean, the cash advance stuff can get out of control so fast, but just merchant account processing, even just charging credit cards, can add up, or other supply vendors. Like one of our closest clients, we actually work as their outsource CIO is for a import export family. So their expertise is sourcing things globally and importing them at a better rate. And so that's the dynamic that comes up most often, is that like our relationship with one family is helping the other family, and can help the family, reduce their costs and just run a more efficient operating business.
Yeah, so we can talk about it offline, but I have a friend that owns a huge merchant uh, business, and
Yeah.
there's some pullback from some of the banks, and so he's
Mm.
looking for one or two extra banks to do the processing for him. So we might be able to talk to you
Okay.
about that. Yeah.
Yeah, for sure. Happy to help with that. We know a couple of family offices that own banks, and one that just bought a bank, and one that's in the middle of the lengthy, painful due diligence process of buying 10% of a bank. I guess it's like the only area that's more regulated and painful than broker dealer world is if you want to own part of a bank, I guess
Yeah,
is what
yeah.
he's telling
The OCC, the OCC's rough. We're big fans. I don't know if you probably know about Mercury.
me. Yeah.
Big fans of Mercury. I interviewed the founder. Some of my best friends work there,
Oh,
uh,
nice.
and we've been, we've got dozens of accounts with them for multiple businesses, and it's a fintech which
Yeah.
figured out how to be, really optimal user interface and results for venture capital funds and entrepreneurs. And they just are at they've just been approved for their own charter because they've been just
Nice.
overlaying another bank. So I'm super happy for
Wow.
them. Yeah.
That's awesome. Yeah, we like Live Oak. I mean, obviously, do your own due diligence if you're listening, obviously, but like we've had a good experience with them, and they pay out a nice, 4% and change. Last time I checked, on just like your normal
On the
savings or
float.
checking
Yeah.
account with them.
On the float, on the
Yep.
DDA. Yeah. I'm happy to promote Mercury because we're super friends with theirs. But one of the
Yeah.
things that's turned out to be, first, their API is amazing, and two, there's no wire fees, like
Right.
zero
Right.
wire fees, which adds
That's
up,
awesome.
right?
Oh yeah. Totally. Yeah. Bank of America. I'm like, okay, I have this balance with you and you're still dinging me like 35 bucks every time, like either way. I'm like, what? Like, yeah, it's crazy. So yeah, I think that's the way of the future. Those banks are going to grow massively in size because like neither of us are millennials by any definition, but like those types want a digitally enabled bank more than anything. And all these people becoming centimillionaires from Anthropic and XAI and SpaceX,
SpaceX.
like they all want like
Yeah,
a
yeah,
Mercury type one.
yeah,
Totally.
totally.
Yeah.
Well, Richard, this has been awesome. Really appreciate you doing this today. And
Sure.
congratulations on building an amazing business and serving the community well. I know lots of people appreciate it.
Yeah, well, thank you, and consider it open invitation if you want to check out. We're in 4 cities next week for the AI workshops, but also we have more summits coming up this year. So just let me know when something lines up at familyoffices.com, and we're happy to have you come in and be on one of the discussion panels, or just come in as our guest to participate. And if anyone listening needs any of resources or questions, it's just richard@familyoffices.com. I'm happy to be helpful to them.
Super. Thanks for doing that. And thank you,
Thank
everybody,
you.
for joining today. Till next time.